Is that true? Are we out here? We out here. All right. Good morning, everybody. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets, Steve Strazza, Chart Wizard Alfonso, whipping charts for us up backstage as he always does. We got a jam-packed show today, so you don't want to hear blabbering from me. We have Tony Dwyer on, brand new guest, Tony Dwyer, first timer. He'll be on the show at 9. We'll hear from Kenny Glick for a few minutes at 9:30. Then we'll have Sean McLaughlin talk options right after that. So a lot to get to. You know what to do. Hit the like button. Tell your friends. Wake your neighbors. Let's go.
Hey, good morning. How are you, fellas?
What's got you so excited and happy today?
I really like it, like when our technology and like our algorithms and the stuff that we build like coincides with things that I'm hearing, from other conversations I'm having with different kinds of people who don't build algorithms like us. And it all kind of comes together. I hear certain things from people I respect and smart people, and I'm like, our shit's telling us the same thing. You really like that.
More about this, or is it just you're going to leave it at this mysterious thing?
I mean, we could if you want to go down that rabbit hole.
Who are you talking to? Who you been talking to?
I've been talking to, you know me, I'm always talking to a lot of people. It's just that a lot of things have been coming together, and kudos to our team. Kudos to Steve Strazza, Shawnee, Lou Dog, Grant, right? Ian, shout out everybody, the Fawns in the house, right?
Good team.
I mean, it's just it's refreshing, right? Strazza, it wasn't always like this, right? I didn't always have the team. I didn't have the technology. We didn't have the data. Like, there was just a lot of things stopping us over the last 20 years that, over the last few years is really kind of, taking off, kind of makes me feel nice and warm and fuzzy inside,
You were a team of one for a long time.
I was a team of one for a long time. And, I remember focused on data and focused on, putting together things. And I remember people getting mad at me. They're like, JC, focus on revenues. It's like, can't do everything, right? I like having other people handle that stuff. And, we can focus on the fun stuff, So that's what's got me, chipper this morning. You guys already arguing about basketball? Love it.
Yeah, the madness begins here just afternoon today.
The madness. So these are the play-in games, or that already happened?
No, that already happened.
Shows me how much I care.
In the play-ins, a lot of this, what is it, Mountain West? It's Colorado State,
Yeah.
Montana State.
The play-ins don't do it for me. They don't do it for me. I know. Yeah.
No, I know. So you got any sleeper picks or anything fun? NC State?
I got sleeper picks in the market. Can we talk about the market?
Yeah, we can talk about the market. We'll talk about basketball later, but we'll talk about my sleeper pick is Drake, Steve. But let's talk about the market.
Okay.
Oh. Last name ever, first name greatest. Right? Drake plays basketball now. All right, quick little morning rundown. Dow futures up 116 points this morning after putting up a 400 spot yesterday. S&P futures up almost 50 basis points, about 25 points total. NASDAQ futures up almost 1% after a big day yesterday. Bond futures hanging in there. I was really looking at that one yesterday. Really, that's probably one of the more interesting intermarket scenarios right now is the long end of bonds. And then you got gold up 2% this morning. Absolute monster. I guess that's got me a little chipper this morning too, I suppose. Silver up 2% on the day. Crude oil flat. Copper up 60 basis points. Dollar rallying again today. Got hit hard yesterday. Volatility index down back under 13 for the VIX. U.S. 10-year yield hanging around near 4.25, hanging in there pretty strong. And then, of course, in the old funny money, you got Bitcoin. Big day yesterday. Big day. Down 1% this morning, down all the way down to 67,250. Ethereum hanging around just above 3,500, up 75 basis points on the day. Of course, you've got the old Solana hanging around near 190. Very impressive day yesterday. Total crypto market cap, Mr. Spencer Israel, you're looking at $2.46 trillion. And that's your morning rundown. Anything stand out this morning?
And we talked on our meeting yesterday. You said, if the Powell and the Fed does one thing, or the reaction is one thing, then this is the environment that we're in. And if it's another thing, and it comes out and there's a dovish reaction, pretty sure you said it's one of those buy everything rallies.
Yeah, because you're getting, because think about it, if the dollar's falling and rates are falling, what's doing well? Yeah. Commodities are doing well, growth is doing well, small caps are doing well, metals are doing well, precious and base, right?
Like risk assets already trending pretty well, in my opinion. Breadth expanding, and then you take that pressure off, the intermarket pressure off. How are they going to do then, kind of thing?
And the bond market not crashing every day has to be positive for the market.
Sure. And you really didn't get anything from the bond market yesterday following the announcement and the press conference, which was really long. And I don't think he really said anything special. Sometimes it's more what he doesn't say. But you got that everything rally into the close. Like you saw it play out just on an intraday basis yesterday. Every second.
You think they're gonna stick it into the week? I got the best chart, I think, to kind of explain maybe what's happening in the equities market. I got a couple of good ones. Throw up slide 2 here. I think this is a great one. I literally started this week's conference call with it. Shows you what kind of market we're in, where JC starts a conference call with the equally weighted indexes. That don't happen very often.
Yeah, that's good.
Every now and then I get a little wild and I start with like a currency. You know what I mean? Like sometimes I get a little
feeling crazy.
Sometimes I got to keep people on their toes, keep them on their toes. So here we are, equally weighted NASDAQ 100, equally weighted S&P 500. This eliminates the, huge components of these indexes and, looks at a broad measure, and it doesn't make these indexes better than the other ones or worse than the other ones. They're just different, right? And I just want to reiterate, it's not better or worse. It's just a different look. To give you some perspective, the NASDAQ 100 equally weighted, no component is more than 1.5%. NVIDIA is the largest, followed by Meta at 1.4%. NVIDIA is 1.5%. Meanwhile, in the NASDAQ 100, the regular NASDAQ 100, you got Microsoft 9%, Apple 8%, NVIDIA 5.5%, Amazon 5%, Meta 5%, Broadcom, Tesla, and then some. So it's definitely much more heavily weighted. And then I got one more for you. So then on the S&P equally weighted, no components more than 30 basis points of the fund, and that's NVIDIA is the largest at 31 basis points. Nothing else is even above 30. So very equally weighted there, as opposed to the cap-weighted S&P 500, where Microsoft is 7%, Apple is 6%, NVIDIA is 4.5%, Amazon's almost 4%, Meta 2.5%. So definitely more weighted there. So I just wanted to kind of walk through a little bit of the differences.
And it's math, right? Like when they rebalance these, they'll rebalance everything to 1% in QQEW, and they'll rebalance everything.
How often do they rebalance? Do you know?
To 20 basis points in RSP. Every fund is different. I would imagine that they follow the indexes that they're tracking. I don't know.
No.
Like how often does the S&P rebalance?
Because they're tracking the equally weighted indexes, which are indexes. Fair enough. Touche. That's fair. Got it. I see what you're saying. They're not creating their own based on the components of the indexes. They're following indexes that already exist. Fair enough.
On the copy. Yeah.
Hey, you're right.
Good. But this is a big development.
Yeah.
This is great. This market cap weighted rally. Broadening, would you say?
Not so much broadening as it is rotating. That's the better. And by the way, I'm the first one that says every single time we have a breadth conversation that I can't have a breadth conversation without talking about sector rotation. Like to me, it's the same conversation. Or part of the same conversation.
You could be concerned about large cap tech maybe not working to the same degree that it was working last quarter or even last month. But don't ignore the fact that large cap materials are making new all-time highs, and small cap materials are making new all-time highs, and industrials have been. And
what about two of my faves? Do you have that chart? Two of my faves.
Goldman Sachs might even resolve this range today. I mean,
never seen it. Never seen it.
Wow. Look at Goldman. Goldman wants it, huh? Woo.
I mean, I got to see it, dude. This thing literally has been trading like if it was acquired. Throw up a new slide 3, Spencer. You know, this is two of our faves. I also have something else I want to talk about, the Midwest mid caps, but these are two names that have been working for us. Obviously, you can still get calls cheap as hell out to early next year, which I really kind of like that strategy because it kind of gives us time and they're cheap, so it's not like like you're spending so much time, right?
Long calls in both of these.
No, I know. But what I'm saying is they're still cheap going out to January of next year. Like you got plenty of time, is all I'm saying.
I think I'm in July's, but I could roll.
Yeah, we're definitely much further along than that. Also, here's a great one. This one coming from Grant last night. Go to slide 4, Spencer.
Got Cliff's NASDAQ copy.
This is it right here, bro.
Yeah. Wow. Great.
This is it.
Yeah.
Now, to be fair, it's kind of hard to because this is literally just one day. And, you kind of want to use, you kind of want to put more weight on these sorts of studies when the market's making a new low, right? Not when it's making a new high. So to be fair, so this is a little bit skewed, but not the point. Not the point I'm trying to make. The point I'm trying to make is that there are no new lows.
We do these tables on a weekly basis too. Just ask, right? So we'll do it anything that hit a new 10-day low in the trailing 5 days, like that momentum report and stuff like that. So we could do that too. The problem is everybody quotes these numbers as a single day number, right? So when we do the week, it confuses people. Whatever. This breadth stuff, you can cut this thing a million different ways.
But I think that the bigger point here is, so let's tell people what's going on if they don't understand what this is. So on the y-axis there on the left, you got all the sectors, right? Materials, communications, industrials, healthcare, financials, etc. And then on the x-axis there, you've got the percentage of stocks in each of those sectors that are making new 10-day lows, 20-day lows, which is about a month, 63-day lows, which is about a quarter, 126-day lows, which is about 6 months, and 252-day lows, which is about a year, right? 52 weeks.
We can do this with a line chart. You're right.
What's that?
We can do this with a line chart.
We can do this with bar charts. We could do this in a bubble chart. I mean, we can. This is a pretty good way to do it. Not for nothing.
You know the moving average one that Grant does with the lines?
Yeah.
You can make the sectors lines here, right?
Yeah, like I said, you could do it a lot of different ways, but I think that this one really stands out. This is a big one, right? And I want to get into a major chart that is near and dear to a lot of our hearts, something we've been watching for quite some time, that is breaking out today. But I wanted to talk about, before we get into that, I wanted to talk about Midwest mid caps. And I don't want to mention any specific names because these are, we'll save those for the conference calls and premium members. But can we just talk about Midwest mid caps? First of all, I love the alliteration.
JC loves the mids.
Mids from the Midwest, boring old $8 billion specialty industrial company that has no Wall Street ratings because they don't need your investment banking division. They got plenty of money. They crush it. A lot of these are raising their dividends every year. They just print money under the radar. 8 billion market cap, 10 billion, 12 billion out of Illinois or Ohio or Wisconsin. You know what I'm saying? Like these guys just crush. Midwest mid caps. That's my style.
I mean, the name is fine. They don't have to specifically be Midwest or
yeah, but there's a lot of them there.
We're looking for unknown, uncovered, unpopular names in unpopular and unsexy industry groups. Some of these companies make ball bearings or tow truck holding companies or scrap metal, or the pawn shop one always gets me. But that's kind of what we're getting at, right? smaller type of businesses, economy businesses. The one that really stood out to Sean that we were talking about on the analyst call yesterday. If you have a home, you've probably paid them for a boiler or a furnace or a hot water tank, stuff like that. It's really good. I think I think Titleist is that way. Acushnet. It's just boring. What? They sell golf balls.
I know. You get very excited about it. I'm aware.
Micron? You want to do a little Micron?
I think we should. How do we not talk about this? We've been waiting for this breakout. I feel like my entire life I've been waiting for this breakout. My whole life.
This is so good.
Certainly Louis and Alfonso's entire life. Maybe not my whole life.
This is how you want it to happen, right?
Gap and go, baby. Gap and go.
And the fractals on this one are just fantastic. Oh, there you go. How'd you get my chart up there?
So this one up 17% today. Check my math, but that's about close to $20 billion in market capitalization. This thing is jumping today. New all-time highs for Micron, finally able to exceed those March 2000 highs. Ain't that some shit?
So tech is not falling apart. Semiconductors are not falling apart. You talked about, oh, maybe it's not breadth expansion, it's rotation. They're rotating within the groups also. Right? Like communications, breadth isn't great, but I could point you to communication stocks that are doing really well right now. Within semiconductors, sure. We're going to talk about NVIDIA, AMD, Broadcom, some in worse drawdowns than others. Micron's up 17% here today, breaking out of a dot-com bubble base. It's not an industry-wide sell-off or corrective phase. It's nothing too crazy that's going on. If charts like this are breaking out, it's not a bad tape.
No. 25-year base, bro. 24-year base. How long have we been waiting for this? I feel like I've been waiting for so long.
A couple years. The fractals on this one are just so good. Like
this thing peaked. This thing hit the March 2000 highs in February of 21. Sounds about right. Makes sense, right?
Yeah.
And by the way, these were June 2000 highs, as a matter of fact. This kept going.
But JC, we talk about how these patterns are like slow to start and require patience, right? This one's so good. If you're just getting to this one now and you haven't already been stopped out and taken a shot at this base, that's awesome, because this is what we call a decisive breakout, right? An authoritative resolution. You're getting the breakaway gap at this major level. If you were to zoom in, we can show you a chart that looks pretty similar to this chart, but just over the past few years, it looks the same.
Yeah.
Right? It's consolidation with the two red
arrows. Can we talk about how Micron failed at the same levels it failed over 20 years ago? So I guess that resistance was still in place. You know how like this comes up a lot? Like, oh, the market doesn't remember what it did 20 years ago. Clearly it does.
Maybe your market doesn't remember. We tend to just ignore those conversations because we've seen it so many times in practice.
But I find myself people having them with me.
They love having those conversations. But
I do?
What do you even say anymore? You just have to show charts.
Right.
Words aren't good enough.
You want to hear you want to hear what the numbers were?
Give me
Not
the
particularly,
numbers.
No. All right. Well, look, it was a huge beat. I'm not really sure why. The consensus estimate was for a 25-cent loss on an EPS basis the last quarter, but whatever, because they made 42 cents per share. So not only did they not lose money, they made some money. EPS looking good there. Sales beat as well. Guidance was very strong on the top and the bottom line for the current quarter. That is, so strong numbers. Huge, big beat. That's what happens when that's what causes you to go.
There's usually like 17%. A big China readout from this report. No.
I did not look closely enough to see anything about China.
Is it still a China name?
Well, isn't every chip stock to some extent a China
big
name?
China.
Is it?
It's like
I have no idea. I couldn't care less.
It's like apparently Intel is like the United States government teacher's pet.
I care about line go up.
Yeah. So Spencer, whatever the numbers were, market likey.
T-Man says they have manufacturing in Taiwan. All right. Yeah.
But not China.
Yeah. Look, massive beat. So
can we just
you finally got it.
Talk about the momentum regime in this name. It's gone sideways, hasn't done much. God, for years now. Here, let me just drop this in. There's not going to be a logo on it. Throw up first slide here.
And this is what did we say? This is a great example of setting your alerts at new all-time highs, right?
Yeah.
Because maybe you would be at the beach or playing golf or something like that, and not seeing the breakouts of new all-time highs, right?
I still see breakouts when I'm golfing, though. I have an alert system.
You're a rare. First of all, you're a rare bird. Second of all, you literally are telling me that you have alerts. So
I'll be closing out positions on Fridays from the links.
I have been with you playing golf when options are closing, and you're doing just that. So that's
That drives my buddies crazy.
I can imagine. That is probably not part of the promo program.
Trading from the golf course?
No, probably not.
Being on the golf course is part of the promo program, though.
It is actually. He encourages that a lot more than I would think.
Yeah, you don't love it.
It's the driving the golf cart and drinking all the beers that he doesn't approve of.
No, he actually tells me to walk, and I laugh at him every time.
Right. Yeah, walk.
I said, I'll be playing alone if I got to walk. So Micron, look at the bullish momentum regime right there. So since 2022 has not been oversold, hasn't broke out of a base, but just consistently pinging overbought reading after overbought reading, and then on the corrective waves, not hitting oversold. This momentum regime right here could have told you this one was probably going to break out here. Momentum.
I think we all agreed it was only a matter of time.
Yeah.
It wasn't so much of an if as a when. Right? Here you go.
You know, with this one though, so if we want to just beat a dead horse, because I think this is an excellent case study, so I think we should. So if you want to do Micron relative to, oh, God forbid, its peer group, semiconductors, not going to look great. Even Micron relative to the overall market, the relative trend, zoom out, forever, not the best, right? It's not Intel, but it's also not NVIDIA or AMD or any of the leaders. Do you just say whatever in that situation, right? We always want to buy leaders and outperformers. Maybe this one becomes a leader now that it's resolved its basic experiences, some leadership over intermediate or long-term timeframes. Do we make that assumption and just get long anyway? How do you treat the relative trend in a name like this with such a perfect pattern breakout?
I think it goes back to just shut up and trade what's in front of you. Like, what if this was an oil stock? What if this was a Midwest mid cap? What if this was a REIT? You wouldn't think twice about it.
I don't buy REITs.
We just bought a REIT.
I didn't.
Oh. No, but you know what I'm saying? Like, this is, it's been underperforming some of the other semiconductors. For the record, for a long time there, everything was underperforming some of those semiconductors, to be fair.
Yeah, totally. But even do it versus the S&P 500.
And what's in the S&P 500, my friend?
Do it versus the equal weight S&P 500. You can keep lowering the bar. It doesn't look great.
Well, you keep raising the bar. It's hard. It's hard to compete with the things that you're talking about.
Listen, it's investors have a tough comp these days, but the reason why we benchmark things against the S&P 500, because if you're not going to beat it, go home, stop wasting your time, just buy SPY. That's a strategy too. So I think it's very important that you're benchmarking yourself against the S&P 500 and consistently beating it if you're going to do what we do every day. If you can't do that, then you shouldn't be here.
Throw up slide 2. It doesn't necessarily have to be by beating the S&P 500. That's not everybody's goal, Strazza. That's not what everybody's trying to do. That's not what I'm personally trying to do. I own the S&P 500, right? So investing every single month is one of my strategies. So what I'm doing with the other side is not like trying to beat that.
Okay.
It has nothing to do with the other.
It's not important to you that your account outperforms the S&P 500 in a bull market. You don't care about that at all?
It's less about that. I got a blog post coming out about it. It's less about that. Dude. I'm in the S&P 500. So what's going on over there is more complementary. It doesn't, One has nothing to do with the
You're
other.
in the S&P 500. You're in the strongest stocks in the S&P 500.
Right? No, I get it. But if I'm already long the S&P 500 in a different strategy, like for example, in a bond strategy, the goal is not to outperform the S&P 500. It has nothing to do with the S&P 500.
Are you talking about like your retirement stuff?
No.
What are we talking about?
You don't benchmark. Not every strategy on the planet is benchmarked against the S&P 500.
Fine. Yes, there's some managers who are small cap managers or international managers. You're not that.
Or fixed income or commodities. There's different strategies. We have different strategies. So the strangles, when we're selling strangles with Sean every day, are we trying to outperform the S&P 500? No, it has nothing to do with that.
Dude, on balance, fine. You have different strategies. That's a diversifier for you. I get that. Cool. When it comes to your
not every account is designed to outperform the S&P 500.
You're just muddying the waters with all the different stuff that you have going on. In a bull market, your long only portfolio, you should strive to outperform or beat the S&P 500. That's
sure. In that specific strategy, sure.
And that should be your biggest and most important strategy because that's the one that's really going to make you the most money and change your life.
If you're trying, hold on. If you're trying to make the most money and change your life, not everybody's trying to change their. I'm not trying to change my life.
Is everybody not trying to make life-changing returns in the market to some degree?
No, not everyone's trying to make life-changing returns in the market. No, that's not
the
goal for
everybody. About how you want to buy a beach house.
Yeah. Yeah, of course I want to buy a beach house. So I could sell everything to buy a beach house, or I can keep my assets, make more money, and also have a beach house.
You're not going to buy a beach house selling premium is what I'm saying.
You're not going to buy a beach house selling premium. That's right.
So I care about the important stuff.
I mean, well, not soon anyway. There's other things that I've got going on that'll get my beach house.
If I'm not beating the S&P 500 in a bull market, I've severely wasted a lot of time and energy and really let a great bull market opportunity go to waste.
Fine, but you and I are different people. You don't run multiple strategies. You have one. Your goal is to make as much money as possible and change your life. That's not my goal, and it's not a lot of people's goals either. No, people have a great life. They don't need to change it.
You might not be able to come on here and admit it, but you want to make a lot of money too. That's why we're all doing this.
Of course, Strazza, but not every strategy is designed to do that.
Well, maybe you should rethink your strategies and your allocations to those strategies because I would want to be.
You understand that I think about this every single day. I got a blog post coming out about it because I think it's an important conversation. I have this conversation every day.
I think you should sell less premium and worry more about beating the S&P 500.
I think you should worry more about yourself because you don't have 3 kids. It's just you. We're in completely different phases in our lives. You're me 10, 15 years ago.
I need Sean on here.
Sean's not you either, by the way.
But he gets me more.
Sean gets you more. I guess. Yeah. I guess.
Let's talk to Tony D. Let's ask Tony.
Please, can we talk about how we have Tony Dwyer here? Tony Dwyer in the house.
Yeah, Tony's camera is not working. I'm working on it.
Tony, what are you doing, man? Come on.
We're gonna talk about interest rates. I have a feeling.
I think we're gonna talk about credit spreads.
The spreads.
We're going to talk about Tony's going to bring up some random, leading economic indicator. He's going to tell me something about, maybe something about the consumer, maybe, knowing Tony. Tony's going to, talk to us about some sector rotation, perhaps. Tony might even get down with some sentiment. Tony gets down with the sentiment. By the way, sometimes when we've run these like sentiment things for some of the online conferences,
Tony loves the data.
Tony loves the data. Tony's like, yo, JC, you know what we should do? We should ask all the guests. You know what I mean? Like Tony's that guy. I respect it. I like it.
So I've been gone down the rabbit hole on the high yield thing since yesterday. Thanks, guys. Thanks to all of you. HYGH. We need Ian. I think. Interest rate hedged high yield bonds.
Interest rate hedged high yield bonds. That's a new ETF.
Because remember what I'm saying? If rates are going higher, how is high yield breaking out? You can hedge the interest rate risk on your high yield bonds, and then you're just taking on the asset risk, whatever the hell you call it.
Yeah.
Right? That's something. That's interesting. I didn't know this existed.
Yeah.
You like it?
No.
Wouldn't this be better in an environment where rates are moving higher?
Potentially.
Yeah, it
I
would.
don't know. All right, walk me through the mechanics.
I can't. That's why I'm hoping Tony knows.
Oh.
I'm not a bond market person.
I feel like
I'm
I've always been a bond market person.
Yeah.
And I as I've gotten older, I appreciate the bond market more. The bond market has been very helpful.
It helps you stay on the right side. I'm a vehicle guy though. And whenever I think about buying bonds, there's like a voice in my head that's like, you idiot. If you want to buy bonds here, there's probably something a lot better that you should be buying. They never seem to be the right vehicle I never pick them. They never get picked.
We got a meeting later, you, me, Ian. We're talking about all about bonds.
Meeting? We have a meeting when?
Yeah, I'm inviting you now for the first time. You haven't gotten the invite. You know.
Wow.
Yeah.
I don't get invited to things anymore.
All right.
You don't like bonds.
I don't get invited to anything, I feel like.
We got Tony. You guys
All
ready?
right, let's go. Speaking of liking bonds. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Tony Dwyer in the house.
What's up, JC?
What's up, Tony?
How you doing, buddy? Not too
Never
much.
been
How you
better,
doing?
Tony. So
boy.
happy to see you. We were just while you guys were figuring out the video and the mic and everything like that, we were guessing as to the types of things Tony Dwyer would be talking about. A little economics, maybe a little sentiment, some sector rotation, right? Some random economic data point that maybe I had never heard of. Tony Dwyer stuff, right?
Yeah, buddy, whatever. We'll figure it out. Done it for a while.
So new all-time highs yesterday for the S&P 500. You've got the equally weighted indexes making new highs. Japan all-time highs. Germany, Europe all-time highs. Rotation into new sectors that weren't necessarily performing last year. Things like energy, materials, Latin America popping off. China stopped crashing. Doesn't seem so bad, Tony.
No, the guys printing the money are kind of giving you the game plan. It's the way it's always worked. You got to follow the money, and whether it makes sense or not doesn't really matter. When they made that dovish pivot in December, that really, they made a major change there when they said that they're going to ease. The market overemphasized it initially. That created this kind of consolidation that we had up until recently. But yeah, the guys printing the money globally are telling you that they're done keeping it tight.
So as investors, a question that we toy with all the time, and I guess technically we'll never have an answer, and we'll just keep asking it over and over again, is, do you bet on the stuff that has been working the most over longer terms, that has been the leader, or do you bet on continued rotation and some of the laggards catching up? Things like, materials and energy have started catching up, maybe things like small caps, maybe even regional banks or biotechs. Like, how do you think about just stick with the stuff that's working the best and just stop overthinking it? And where does a place for new rotation, come into the decision making? How do you think about that?
Well, JC, over a very long career and a lot of mistakes, I found out, years ago, and I've never deviated from it since. The market correlates with the direction of earnings. Direction of earnings is driven by economic output. That's driven by money availability. That's driven by Fed policy. That's driven by core inflation. Those are the 5 facts. So last year, the Magnificent Seven, as it were, dominated and dictated all the returns. And that is because they dominated and dictated all of the earnings growth. 100% of the earnings growth in 2023 came from the Mag 7. That's actually true again this quarter.
Wow.
Earnings would actually SP 500 operating earnings, according to my buddy at LSEG. I call him my earnings wizard,
Nice.
TJ Dillon. He comes up with data that I can't come close to. Earnings would be about down about a little under 1% this quarter, excluding the Mag 7. So that's why it got all of the attention. So what happens as we progress through this year is that evens out. You get equal participation from the Mag 7 as you do from everything else. And that opens up the opportunity for those to attract money. So I don't know that you're the trader. You're I stink at trading. I think that's very clear. But I follow the intermediate term trends, and that intermediate term trends for earnings is still positive, which means the market's positive, but it's broadening out, which means the market should broaden out.
Got it. So the sector rotation that you're seeing into things like materials and energy, and even utilities and REITs have been bouncing. You think that's earnings broadening out, and therefore the sector rotation broadens out as well?
It's the expectations that earnings are going to broaden out, JC. It's the market discounting better performance broadly in earnings. So it comes across the board. It's been so concentrated. I think the issue that folks have in the stock market is that it's very driven by money flows. Like prime broker looks are probably better than fundamental looks on a trading basis. So when I think about what really is driving stocks day to day, it's not the fundamentals as much as it is the tactical stuff and the quant stuff. The fundamental stuff takes time to shift. And like in December, we overdid it on the Fed cutting rates 7 times. What were the odds that the Fed is going to cut every single meeting in an election year and not appear to be
The odds are
independent? So I just don't think that's right. So ultimately, the broadening should happen to these other areas. Listen, the guys told you yesterday that they went up the Fed, meaning the dot plot expects now more growth. They increased their growth estimate for 2024. They increased their core inflation estimate for 2024, and they still said that they're going to cut rates 3 times and that we're at the peak of the cycle. So they gave you their playbook, and we can either choose to fight it and ignore it or to listen to it. So for me, the question becomes, do you chase the kind of ramp that we've already had, or do you try to buy a sharper pullback? And that's kind of the camp I'm in.
You think you'd rather buy a sharper pullback?
I would.
Like into the spring.
And again, it doesn't mean that the market
rally
can't go up. The people love to come on shows like yours and make big statements. I think it's kind of fluffy. Ultimately, it comes down to you can very quickly be right for 5% more and then get smoked by 10% in a correction. So to me, I try to avoid that kind of environment. And frankly, it's been wrong over the last few percent.
Yeah. And you think that buying up here, stocks on a broad level, put you in a vulnerable position to get see that 10% correction right after you buy it? That's you think is the risk right now?
JC, we've got 4 key tactical indicators. I call it. I have a site, dwyerstrategy.com. And it's obviously part of Canaccord. So I have 4 key tactical indicators. It's the percentage of stocks trading above their 10 and 50-day moving average. It's the VIX with a 10-day rate of change. It's the weekly S&P 500 stochastic. Now I'd use the equal weighted S&P. You could do that too. And the last one is the National Association of Active Independent Managers. So I'm old enough, way old, to remember. I used to market Marty Zweig when he was around, and it was in the early 1990s. And Marty Zweig had 2 things: don't fight the Fed and don't fight the tape. Like, those are 2 rules that I think you'd agree with. Mm-hmm. There's nothing wrong. The Fed is telling you they're printing money. They're looking to ease. They're going to not print money. They're stop being as tight. And the momentum indicators we got following the dovish pivot were bananas. Like, that's a technical term. There's nothing I can find in the data that doesn't suggest it should be a better year. Those 4 key tactical indicators don't stay as overbought and as enthusiastic as they are now very much, in my opinion, much longer. Like, for example, National Association of Active Independent Managers. I like that because the participants are motivated to give a response versus guessing at somebody on the internet's giving you a bullish or bearish opinion. Like, you try to get the same people. So they have a limited audience that pays a fee. I think it's a good data series. 25% of the fund managers, active managers, were long stocks at the October low. So we actually at the time put out a thing. What was the title? Environment ripe for a rally. Okay. Market ripe for a rally or something like that. It's the opposite now. It's 104%. Anything over 100% means you're levered long. So chasing that on top of the rally that we've already had in the indices and the big stocks, that's not my game. I'm awful at it because I could say, okay, everything looks great right now. Let's chase it. And then, 4 days later, you have a 2% down day and you're like, oh, that was wrong. Get out. And I don't want to be that guy. I would rather buy the fundamental bet that don't fight the Fed, don't fight the tape on an intermediate term basis at a better conviction level for price is better way to say it, I think.
What I'm not disagreeing with many of the things that you're saying as usual, Tony. But rather than waiting for a bigger pullback, what I found myself doing more of is just buying different things. Like you were buying financials very aggressively early in the fourth quarter, where the joke internally was, we're not long banks enough. We're not long banks enough. Like that was like the joke, like joke, not joke, right? To buy financials here as we hit the former high fires, like I just don't like that trade like I did before.
But which financial, JC? I think we have to be very specific. Like when people say the market's doing something, are you talking about the S&P 500, which is still so? Guys, only one other time in history has it ever been close to this percentage. The top 10 stocks as a percentage of the S&P 500 market cap is 33.8%. The only time it's ever been anywhere near there was the early 70s with a Nifty 50. You didn't even come close during the dot-com. So when you look at a chart that's provided to us by Ned Davis of this, when it changes, to your point, JC, of buying other stuff, when it changes, it's generational. It doesn't stay here forever. And when it changes, it's generational. And both the occurrences of the early 70s and the dot-com, you went through a 15-year period where that percentage decreased significantly. So what creates that? And it's earnings distribution, meaning broader earnings outlook versus just those top 10 stocks dominating the earnings. And it's Fed policy, it's interest rates.
All right. So let's pivot, because what I was trying to say there is some of the things that we're buying are more in the materials and the energy space, and I feel more comfortable buying those things now than some of those others, and that's kind of like how I'm playing what you're saying, right? Me personally, but also other asset classes. Gold's breaking out of a 13-year base finally, right? Silver looks like there's this massive base. Copper's been acting well, holding out above 4, still holding above 4. There's just new things developing. Let's talk commodities. I know I don't know how much you dive into commodities for your day job, but I know that kind of like how you think, more macro and everything like that. Obviously, like for sure, it plays some kind of role. Can you touch on how you think about these metals and oil and energy in general? How do you think through this?
Well, the global central banks, just starting with the Swiss bank, clearly announced that they're turning policy. You're going from a tightening regime to an easing regime. That's not historically bad for commodities. And I don't put out individual estimates for commodities, but that's a seismic shift. When you're going from trying to restrict money globally to trying to enhance money globally, it's like the currency stuff, JC. The U.S. is higher in rates than everywhere else, correct? So why isn't every single thing denominated in dollars? It's not about the currency. It's about the growth outlook. So currencies move on the growth outlook. If you have like you have this show, you have this business, you're younger than me, you're vibrant, you're more, aggressive. Like I want to bet on that guy when money's coming in. If you want a staid and stable business when the crap's hitting the fan, come to me at Canaccord. Like I'm older, I'm mature, I'm on the back nine. Like when you think about who you want to bet on in a more vibrant business environment, it's the younger, more aggressive, the one that's getting the money. Come on, let's go. When things are very unclear and uncertain and you just want stability, you go to the old guy. So where do you go when the global central banks are easing monetary policy? That's the good aggressive growth guy. You want to go to the emerging markets. You want to go to other currencies. You want to go away from the dollar. That's what drives it, is the growth outlook. When the growth outlook's negative and the global central banks are hiking monetary policy, go to the old mature guy. And it's the opposite. We're entering the opposite regime now.
You hear that, Strazza?
is during
if I'm the young and aggressive one, what does that make you?
Chief YOLO officer. During bull markets, you want your offense on the field, is what I'm hearing.
Call your offensive plays. I learned that from Tony Dwyer.
That's it, right? That's the play. Now, and then you guys choose. It's funny. We come on these shows like we know what you should do. I have no idea what you should do. I don't know what your time frame is. I don't know what your financial backing is. So you got to figure out what aggressive means. But that's really the regime and that's what the market's telling you.
Well, I'm telling JC, don't sell premium. Why are you betting on sideways? It's a bull market.
In certain strategies where we only sell premium, that is literally what the strategy is designed to do, is to sell premium. Why would we not sell premium?
Maybe do less of that strategy depending on the environment and more of a more offensive strategy.
Yeah, maybe. So you could do that and I'll worry about myself. So Tony, let's talk credit spreads, right? I keep hearing about this historic credit event is around the corner and everything's about to fall apart and Black Monday and all this gloom and doom. Credit spreads are as tight as they've been, I don't know, ever. You can't have there's no stress in credit. How bad can things be?
Well, it's different in credit. What's been different this cycle, and this is different this time, it's statistically accurate, is it's not just about high yield debt. You got to throw private credit in there. Yep. That's been the funder of most of that. And in reality, every single indicator I've ever seen that works to predict a recession showed up that there should have been a recession last year. I was in the recession game. I still am to some degree. The reason is that I believe that it didn't happen is because you took private credit from 10 years ago to 1.8 trillion today. There's a new Fed.
Is that what the number is,
Finally
Tony?
did a Fed piece on it.
And it's really just the past several years, right, Tony? It's been a really big
it's mostly thing. In the last 2 years, it's almost doubled, Steve. So when you've added about $800 billion of so what does private credit do? And I'll get back to the credit spread issue in a second, JC. What does private credit do? Let's say you're a venture capital company or private equity company, and you go out and your mandate is, I buy 10 companies, 7 are good, or 7 are not going to work, 2 are going to work okay, 1's going to hit a home run, right? That's the venture play. What's happened with excess capital being allocated to private equity and private credit is you've held up those 7 companies. So instead of having them go out of business because they don't have access to capital markets were closed last year. Bank lending was closed last year. So where'd you get the money? And it's in the unregulated, untracked private credit market, which is huge. So how is that affecting credit?
So we don't have good data for this?
We now have very good data. It's just the Federal Reserve just came out with a white paper on it. So if you do a word search for it, it's a fantastic read. It's 21 pages. It's got graphs. It's like an old school research paper. It's really it's really good and it's readable. And I've been dying to find it, Steve. I've been hunting this down because the whole thing hasn't made any sense to me, but now it does. You had a source of capital that never existed before. Historically, if business shuts down and slows down and you don't have access to bank lending, you got to lay people off.
Yeah.
So you haven't had to lay people off because you can do a private credit deal with any of the big players. And that's what's happening in commercial real estate. So maybe, JC, that's why credit spreads are historically tight. But on that level, let's throw a little common sense in. Credit spreads are historically tight. People like me love to talk about it. The issue is, if you were 4 years ago, if you raised money at 3 3/4 as a high yield company, and you're now doing it at 7 3/4, you don't really care what the credit spread is. It's a lot more money. So you're coming up against. So why is there companies within the same industry doing so much better than other companies? Because it's not about the macro. It's about a company's ability to manage through their debt in a different kind of environment. So the credit spreads can be a little bit misleading because they're tight, but the rates are so much higher. If you have to refi or issue new debt, it's going to cost you more money.
What's the risk of this whole dynamic over the long run?
Ultimately, that you've just pushed out a recession instead of canceled out a recession. In other words, if you have those seven, I'm in my goofy example, you have those 7 companies that actually start to really lay people off and they don't have access to new capital. I think what folks forget is you and me don't drive the tape. I don't care how much money you guys are managing individually. Active managers don't drive the tape. What's driving the ultimate investment landscape is pension plans. They have all the money, pension plans, endowments, insurance companies. And where are they allocating money over the last 15 years? Private credit and private equity. So you have, a more concentrated move into domestic U.S. equities. And it's just a different environment because of that. What's that?
Kicking the can down the road, JC.
But that's like back
Maybe.
before, I don't know if you guys were in the business in the early 80s. There's Todd Harrison. I don't know if you know Todd. He had this thing called Media. We had this conference and there was a bunch of speakers, a friend of mine. And they're all in that kicking the can down the road, doom and gloom. And the line that I use that I love is the sun is statistically going to blow up someday, but it's a bad trade. Right? Like you're not going to get paid on the trade. So the doom and gloom.
What is it? Art Cashin?
It's 100% going to happen.
If you bet on the end of the world, there's going to be nobody there to pay you out. Like even if you're right, there's going to be no one there to pay you out, right?
Right. Like that's why usually the really big short players get it right. They're super smart, and it's hard because if you stay that way, it can't shift. You cannot fix debt with exponentially more debt. It's just someday not going to work. Clearly, we're not at that day.
It's tough to time that though.
Credit. You can't.
The timing is hard.
It's like the sun blowing up's a bad trade.
What do you think? What do you think people are missing, Tony? Right, we talked about commodities. I think people are,
All right, here I got one, JC. Here we go. Do you guys have a landline?
No.
I don't have a landline. Even I'm old and I don't have a landline. Okay.
Why would we?
So I don't have a landline. I live in the mean streets of a town in Bergen County. I had a couple of guys from Newark steal my wife's BMW out of the garage while I was in it, while I was in the house having pizza with the family. Okay.
Wow.
7:00 on a Saturday. So here's how they collect the data for the household employment. They collect it by knocking on doors and calling landlines. That's literally how they collect the data. There's no way my family is going to answer the door, somebody looking for information on my income. I don't have a landline. They can't call the phone. So how are they getting data from me? They're hoping to God that I fill out the Census Bureau form and send it in. Okay, so that's the household employment, the unemployment rate side. On the payroll employment rate side, if your viewers want to go to the Bureau of Labor Statistics, there's something called the initiation survey rate. What that is I call All-Star Charts, and I'm the Bureau of Labor Statistics. I say, hey, JC, how many people did you hire? How many people did you fire? Let's talk about the survey, temporary work, all the questions that the BLS and it's called the Establishment Survey, the CES survey. Prior to the pandemic, I'd reach out to you January 8th. You get it back to me quickly enough so that I can include your information in the January employment data, the payroll data that we all tighten up for on the first Friday of every month.
A lot of ifs.
Okay, so check this out. Prior to the pandemic, a median 70% of companies like All-Star Charts would respond quickly enough to have the data in that first survey. Now it's 27% in the most recent data. Only 27% of companies are getting back in time to the Bureau of Labor Statistics. That's why you had, if you came into the year, the first month was 335,000 jobs. It got revised negatively by 176,000 jobs. How did that happen? Because there's no data. They're not getting the data right. So if you combine the two most frequently talked about topics for me, I'm not a trader anymore. I'm on the back nine, probably 17. So when we think about it, the two top stories that I'm talking about with clients are, how are they collecting the data? The Fed got it right once, 1995, once. That's when the data was good.
So what's the solution? Right. Do you just ignore it? I mean, you got to pay attention to something.
You got to use what you got.
Yeah, it's.
I mean,
it's-
I ignore all that
It's
stuff
literally
anyway. And I
what
didn't
they
even
say
know
when
what
they're
Tony
asked
just
about
said.
it is how do you get, they've got to figure out a way to get the data. But my point of it is you could have people like me come on here and say 335,000 jobs, Fed's got to tighten. I mean, how many hedge fund guys came on and said they're not even going to loosen once this year because employment's too strong. And then you got a 2-month revision that wiped it out. So what I'm cautioning your viewers is trying to make a trade on economic information that is at best incomplete and probably a guess, I think is a mistake.
I think that's great
So
advice.
that's
What do
I
you do
talk
then?
about with clients.
So
What's
what
that,
do you
What do we
do?
do about it? What do we do about it, Tony?
So you wait for the revision. Like that's why I'm an intermediate term guy. And that's you wait. You make sure that the data you're using good. You at least wait for that first revision. Like you
And
can go
that's
to the BLS site and see that stuff. And
that's a
here's what I'm doing. I
by the
saw in the
time-
chat room somebody's talking up some of the private equity and big private credit players. Watch what those guys are doing. Read the news. Like so many people look at public companies. I saw it. I saw it on the internet, so it's got to be right. There was a tweet I saw at some point where the number of public companies in 2002 was 5,000. It's now 4,000. The number of private equity funded companies in 2002 was 5,000. It's now 16,000. So we're looking at the wrong data at times. So just do some research, look at news, figure out what Apollo's doing, what's Ares doing, what's KKR doing. Yeah, they're public companies. You can figure it out.
I think this is a bigger theme. It's an even bigger discussion, right? Markets are dynamic. They evolve and change over time. And the data that we should be paying attention to often evolves or changes over time too. And we have to kind of change our processes to adapt.
One more. I got one more for Tony. You mentioned sentiment without even saying the word, Tony, and I love that about you. I like how you kind of talk about the active investment managers without using the word sentiment. I see what you did there.
Yep, sentiment.
You're looking at sentiment. You're looking at sentiment, Tony. You can't fool me. And it's not just the active investment managers. That might be your preferred measure. We aggregate them all together and create like a composite index. But like when you look at newsletter writers, most bullish since the last cycle peak.
Yep, 60%. Yeah.
Huge. And by the way, a gentleman like yourself, an experienced gentleman, I feel like you love the investors' intelligence. You got the data going back to the 60s. That seems right up your alley, no? A lot of data.
Yeah, except they're very. I get it off of my street accounts thing, and I like they poll newsletter writers. Who's a newsletter writer now? How do you poll you? Like, I don't know how they do the poll, so I don't know if they're polling the same people. I would rather poll people that are actually trading the tape. I don't want to hear about
the active investment manager gives
come
you
on
that.
TV. They're made for TV. I'd rather watch people that are actually moving money around and seeing what their sentiment's like. In October 27th, 25% were long equities. Currently, after the ramp, it's 104.
Tony, I spoke at their conference in April of last
year
or spring or May.
Oh,
last
I spoke last year.
23.
Oh, that's right. You came on after me, I think.
You missed me by a day. I was the really bullish guy, right? Right. And I asked everybody to raise their hand if they thought that we were in a bear market or we were in a bull market. Everybody raised their hand that we were in a bear market. I asked the audience if they thought the S&P was going to close higher or lower. Remember, this was either in April or May of last year. They all said lower. And I said, well, for the next hour, I'm going to tell you why you guys are all wrong, right? And they took it well. And they were actually a great bunch. I don't know if I'll ever get invited back again, but I really enjoyed that experience. How about you?
Yeah, they're good. That's a good crew. They manage money. They're active managers. That's who I want to hear from.
Financial advisors. They're financial advisors.
Because they actually, when they do something, it means something. When we do something, we just change an opinion.
I know, Tony, but like when you say they're active managers, they're financial advisors. Like they're doing some active stuff, some not. Yeah. Like, is it really a pure play?
It's not somebody that's not managing money, guessing it based on what they see. It's what they're actually doing. So it doesn't matter how much money they're managing. It's how they're acting given the information they're given.
It's as good as we.
And is that perfectly right? No. That's why I use the S&P stochastic, and a sentiment measure is the percentage of stocks above the 10-day moving average. I think you nailed it. I find all technical measures are sentiment measures. It's based on human.
I think you nailed it. It's not perfect. Nothing is. This is just another example of something that's very useful, and it's not perfect, and we know that, and that's okay.
What's the really bad one that like asks people if they're bullish or bearish and everybody lies? Is that investor?
The American Association of Individual Investors. It's like 300 Republicans in the South or something
But
like
even
that.
even that's bad. But even at extremes, it's like most of the stuff we do, because it's an algorithm and quant and momentum driven business now. Usually, the only time these indicators mean anything is when they're at a true extreme, because that's when human nature gets involved and it takes it out of the algorithm world. That's when you get that whoosh, that October 27th of last year, or now, where you're getting the whoosh up. You know, that's when human nature gets at the extreme. It's in all these indicators, and that's when they matter the most.
Tony Dwyer, ladies and gentlemen, one of my favorites, Tony. Big fan of yours. Thank you for coming.
It's great.
Good to
Thanks,
see you
Tony.
guys. Have an awesome day.
Tony D.
You know,
Dwyer in the house.
I don't know what's wrong with everybody in the chat, but Tony's a legend. You guys are lucky to hear 20 minutes of him.
What? Nobody's hating on
That-
Tony. Who's hating on Tony?
Hey, sometimes you
That
gotta-
was tremendous.
Yeah.
Tony Dwyer is the man. People were saying, is Tony, because he said he was from Northern Jersey. People were like, oh, is he mobbed up? He's like in the Wall Street Mafia. Like he's connected because he knows everybody because he's been around for a minute. Tony Dwyer is very well connected. Who doesn't know Tony Dwyer? Everybody knows Tony.
Crazy story about his car.
Yeah,
Oh,
right.
it is nice. And he sounds to me like he lives in a nice neighborhood up there.
Yeah, I'm not sure what that's about. You summed it up at the end right there. The data may be bad, but it's all we've got.
Yeah, figure it out.
And we all have the same information. Well, at least
It's
when
not
it
so
comes
much
to,
that it's bad. Not all data is bad. Some is less perfect than others.
yeah,
But we
Yeah.
know that. We know that going in.
Listen,
You know?
there's two
Yeah.
things that you could do once you realize what we're talking about. You can either take your ball and go home and cry that it's not fair and the market's rigged, or you can understand that you're operating in a world of imperfect information and uncertainty and do your best. Two options.
Yeah.
Annie Duke
Yeah.
does a great job of explaining this, that we are making decisions with incomplete information, and we know that going in.
Kenny, I'm excited for Kenny today.
yeah. I'm gonna bring
Ooh.
Kenny on right now.
I got
Kenny,
some stuff for Kenny.
you see, hard pivot here from Tony Dwyer to Kenny Glick. Hard pivot.
Hard pivot. And you know, and my goal is the next time we have Kenny on, I'll have hopefully a bumper for him. But for this time, Kenny, we're just gonna run the bumper and bring you on.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Jefferson.
Sup, players?
Kenny Glick in the house. Kenny Glick, I feel like every time I see you, got more shit behind you. Every time.
It's actually less shit now. I actually cleaned the desk. I took all my silver and put it in a box because, I don't know, it's serving me no purpose. But how are you?
I have never been better, Kenny. Things are good, man. Things are very blessed. You know, feeling healthy. You know, the kids got sick this week. Kind of threw me a curveball. I was supposed to be in the city last night. You know, couldn't make it. A couple kids in the hospital. But, you know, they'll live. You know, they'll live. They get a little medicine, a little sleep. They'll be good as new, right? Life
Right
is
on.
good, Kenny. It's a bull market.
As long as they're not short the queues, everything's all
There's
right.
so many bull market parties that I can't go to all of them. There was a bull market party last night. I was even like on the I was supposed to be like a panelist or something. Couldn't make it. Too many bull market parties.
Yeah. I'm very distressed right now after yesterday, but I don't even want to get into it. But what's up, everybody? I want to just say get right to this point. It's been crazy, this market, legitimately, especially for a guy that's most of the time I'm bearish a lot of ideas. But what we're going to be doing tonight, I wanted to just come on the show today and get right to it. Invite everybody to my website tonight. We're having your friends from Finit, and it turned out to be really, really helpful. So, you know, I trade volume weighted average price exclusively, and they have a scanner that looks for institutional order flow, which, and again, my people, just like you, JC, we're all about price. That's all we care about, right? So every time somebody brings us something that's new, we're very skeptical. And my people were loving it. So tonight we're going to have them back on the show with their programmers. We're having Jay and Dave on the show.
Is this
and
the schmooze session?
Yeah, schmooze tonight. So if you don't know, I love trading so much and talking and just, shooting the shit with people that Thursday nights we get together. And usually it was a review, but it's become more of like, we call it the schmooze, and we just, shoot the shit. I have a guest on. We talk mostly a little bit more about options and preparing for Friday's option trades. But tonight, special guests Dave and Jay are coming back with their.
And this is on hitthebid.com, right? I'm gonna drop the link in the chat right now.
Yeah, hitthebid.com. And the easiest thing, and again, I know you guys get a kick out of it, just email me, kennyglick@aol.com. I still use dial-up. That's why I'm a terrible trader. But yeah, tonight's going to be a lot of fun. And then if you come tonight, tomorrow I'm doing an off-site, little seminar for an hour. It's something called the Traders Exclusive, which I'm going to give a little preview of the trade setup that hasn't failed. Not one has failed so far in 2024, which is ridiculous to say out loud. And then on Friday, I'm doing a preview. And if you guys are just geeking out enough, Saturday between 12 and 2, that's right, on a Saturday, I'm getting together with some guys that still really haven't got a grasp of what this trade's all about. We're going to even do more reviews. So it's going to be a really big 3 days for us.
Wow.
And it's a great time to be talking about that as earnings season's winding down. It's been a pretty crazy move. And listen, I'm doing less trading right now as this market continues to rip up. As a shorter, I need to take a step back right now because, man, I got my ass kicked yesterday. I mean, any trade I did, I was top ticking, selling out. I mean, it was ridiculous. Sure,
you were looking. So hold on, stop, because a lot of people don't understand what you do. So a lot of the things that you're doing intraday are mean reversion in nature. So you're fading gaps up, you're buying gaps down, and yesterday did not mean revert.
Right. Well, we had a beautiful trade. If you want to see exactly, and I'm going to go over this, tonight and Friday and Thursday. PDD short was our bread and butter. You came in, the stocks gapped up big, Chinese name. I'm not a fan, so I just looked to short it. Once it breaks VWAP, we're crushing PDD. It gets down to the prior day VWAP. You all know about anchored VWAP and Brian Shannon. We basically trade the same kind of style. I anchor my VWAP to prior day and then the prior day, and I look at 3 or 4 to 5 days worth of data. Phenomenal trade. And after that, it all went horribly wrong. I don't know what it is, but after the market goes up that, considerably, I just get bent on this idea that I'm going to short the market. I'm going to be the one that top ticks it all. And I just got annihilated yesterday. And the sad part is I was waiting for that IPO to come out, that A-Lab, because that's basically ARM's younger brother. And I did very well with ARM. I couldn't even trade long yesterday. It was like bewildering that somebody who's been doing this for 30 years. And again, listen, I hope you guys appreciate that. I just need to unleash. Yesterday was like a tough day. And how do you get back on the horse? You go right back to the trades that work and, just start doing what normally works.
Right. Just get right back into it.
Yeah.
So a little birdie here told me you were shorting Qs yesterday.
Oh yeah.
And now you like the SQQQ too, so you'll just go long the inverse Qs.
Well, that's the way that I, again, I didn't get my ass kicked as bad as it could have been because I was buying SQQ and I was buying some calls and I was just short the Qs. That wasn't really the worst of it. It's just like it seemed like yesterday, because I was a little bit overly bearish. Every long I put on, I was so anxious about. And I just forgot about charting. I forgot about stops. I forgot about everything that I've learned for 30 years. And I just was in that, just like a poker player. And I just felt like I was Mike going up against KGB. Oh, do I pull back now? What am I doing here? And I couldn't get the tell. I didn't see the tell until I was broke. So I've been talking to, people about this for the last couple of days. And, I talked to people about, how could this market keep going up? All these layoffs at all these companies, interest rates aren't budging. We got inflation, stagflation, hisflation, herflation, your mom's inflation. Everybody's got inflation and nothing matters. It's absolutely incredible. And it all comes down to this. Just ride the wave. Just ride the wave. Stop trying to make so much sense out of it. The harder you deep dive analysis, most of my deep dive analysis makes me want to be bearish. And there's nothing to be bearish about. I think we could go parabolic from here. Why not tack on another 10% from here on the Qs, which gets us to 500?
Yeah,
It's
but
right there.
Yeah, but there's things that keep changing underneath the surface. Like you have new types of stocks, new sectors that are working this year that weren't working last year. So, it's for me, it's less about the overall market itself and more about just there are new opportunities this year that weren't around last year. What's wrong with thinking of it like that?
Oh, I'm loving all the new opportunities. Listen, this has been a phenomenal year. What I'm saying is like we're having this debate again about whether or not there's going to be a rug pull or this is the last leg or my favorite thing. Again, as a bear, when I hear these things now, I laugh. I'm legging in. I'm legging into my short right here. Yeah, your legs are broken. You're stumbling around right now. What are you talking about? You're legging in. You're getting crushed. There's no legging into this market. You just cannot get in its way. And again, it took a day like yesterday just to get slapped around to realize like there's just you got to just take it back in this market and just let it go, let it ride, baby, ride the train. I don't know what I was thinking a couple of days ago, as I really got convinced we were about to roll over, and here we are breaking highs.
So hold on, when you're getting short, you're not just shorting the index, you're shorting individual names like the PDD. Or you're doing both?
I'm looking at QQQ most of the time. I'm a QQQ trader, so I'm looking at the dailies. I'm usually on the dailies, but I was loaded up on SQQ, thinking we were going to make some turn. I was waiting for the rollover, and I just started ignoring everything that again, the volatility products were all crashing, which usually means we're not going to go down.
Right.
And I just ignored it. But
and this was after the Fed announcement when it really started moving again.
Yeah. And then there was that move right at 235.
Yeah.
Which really screwed me because we actually started to roll. We broke the VWAP. I was like, all right, Here we are. This is going to be the one. I'm right on it. Still got blown out.
Do you often see a fake out before a big move on an event like that? Do you often get a fake out like that? Do you find on the internet?
Normally, and again, this is why my bearish attitude got in the way of what I was looking at. Again, you guys we're always saying the same thing. Let the market tell you what to do. Yesterday, I went right back to that 2012 Kenny Glick. Nope, I'm right. No, everybody else is wrong. I'm going to win, and I got punished for it. And it was absurd. And you look back and like, what was I doing? And it's just like it really is that poker thing where you get that one bad beat, and next thing you know, you're going all in with Jack 4 offsuit. I mean, what am I doing? So, I'm going right back to what works. I'm just looking for the play the fades and the gap reversions, because that trade, like I said, friends, and I'm going to show it to you. And again, I could back test it, front test it, forward test it. It hasn't failed all year. Not one of these setups has failed to provide a winning trade. It is just absolutely amazing. And I say to myself every time, why do I do anything else? And then now I'm at that point. No more shorting the Qs. I don't care. When they start to go down, that's when I'll short them.
Yeah, but is there anything wrong in a short-term time horizon? Is there anything wrong with being short Qs below an anchored VWAP?
No, I like that idea. We haven't even got past an anchored VWAP. We haven't even got past like a 2-day. That's how strong the market has been, even in this little mini correction. Those March 5th lows, when they broke, I thought we were going to roll over, but yet we held, and then it came back and we held again. So we more or less have a triple bottom. So if you look at that the March 5th low when we had that one sell-off and then we tested it, that's it. I am not shorting the Qs anymore. I'm not playing fades unless we break those March 5th lows and I see some volatility indexes going up. And again, I've been looking for blow-off tops and things that I normally would see. The weed stock started to move, which is usually a sign that there's nothing left good to buy on earth. And still, the Qs are here at all-time highs. So,
Kenny, I got a good one for you. Throw up slide 11 here. Here's a good one. The way I see it, mathematically, you can't have a market correction of any kind without the prices of stocks going down.
I heard that.
I mean, whether you're bearish, you're bullish, it doesn't matter. The world's coming to an end, World War III. We can all agree that you can't have a correction without the price of stocks going down. These are all of the stocks in all of the sectors in the entire S&P 1500. So this includes small caps, mid caps, and large caps. Every single sector, 10-day lows, 20-day lows, 63-day lows, across the board. You know what you notice by looking at this table is that there aren't any stocks that are making new lows. There aren't any stocks going down, or at least holding. Like you had, I think 50% of the technology stocks made new 10-day lows. Now there are 5% of technology stocks making new 10-day lows. Like you're just not seeing expansion in new lows. When you do see some new lows, they don't stay down there. Like that's just the market we're in. So if you're looking to short the market very aggressively, that's fine. But the market needs to go down. In order to do that, stocks need to go down. They have not.
Yeah, exactly. That's why I'm sticking with the individual names right now. I mean, I went from hating on some of these names. And the thing, this is another thing about trading. If you accept that you're wrong, you know that's a good trade. It really is simple. Like this SOUN in particular, right?
Yeah.
It looked like a pump and dump, right? And then 3 days later, this has become my favorite stock on both sides. Liquid, you can buy it, you can short it, has half-point increment, weekly options. There's nothing not to like about it. And I make money on that stock every day. And we're long right now a little bit on SOUN as we're speaking. That's where I'm sticking. It's just like trying to, again, when we time the market, that's been my distraction in my career. I've always tried to be that guy. I want to be the one. I want to be the one that picks that top. Stop doing that. Stop doing that. And when you start to see your mistakes, and you accept that you're wrong, those trades turn out to be the greatest trades. Like when I was like, you know what, this SOUN does look good. You know what, I'm going to, participate in this move, even though I didn't like the action. Next thing you know, it becomes one of my favorite stocks.
I want to add to this quickly, because this is a conversation I've had with Dr. Brett Steenbarger several times over the years. And this is Paul Tudor Jones's trading coach. So you probably want to listen to this guy. He's worked with some of the greatest traders of all time, right? For many, many years. And he'll tell you the hardest thing for traders to do, no matter how good an experience, is to admit you're wrong and then flip the trade. So in other words, if you're short, you get stopped out, you flip it, you go long. Or if you're long, you get stopped out, you flip it and you go short. Consistently.
Yeah.
Those end up being the best trades that you put on all year, and it's almost impossible for a human to do it. But if you can figure out a way to overcome that and do it, it's going to be very profitable. And that's why we're here in the first place, is it not?
It's absolutely. I mean, some people call it the 360, but they realize, wait, that's going around in a circle. It's called the 180.
The 180.
Yeah. It's only the 180,
Yeah.
not the 360, because then you're back where you started. But yeah, absolutely.
Look, I pinned the link to Kenny's site in the top of the chat. Hitthebid.com, the evening schmooze tonight. Kenny, we'll see you there.
Yeah, man. So anyway, it's going to be a 3-day festival. So it's Lollapalooza at my website of trading. So thanks for having me on, guys.
You can also email Kenny Glick at AOL.com.
All right, guys. Be good. Be careful out there. This market is a little treacherous, but, again, fun to trade.
Always.
Guys. See you soon.
Be careful out there. Man.
So Kenny is now on an elite list of people in my life. It was just only my mother that had an AOL email address still, but now Kenny can join that list.
Dude, my wife has a Hotmail address.
That's something. That's wow.
Hotmail.
Wow.
All right. I'm bringing Sean on.
I was going to do, let's go.
Johnny, baby.
Hey, we need to rework my contract. I can't be following Kenny Glick. That's just not cool.
Tough follow.
He's a tough follow, man.
Follow. But you come in, and you kind of take a deep breath, and Kenny's very aggressive, right? And Sean, Kenny's a little bit older than you, but you were, I don't want to say more mature. You're just different.
Kenny and I, he's a little bit older than me, but we grew up in the market at the same time.
That's right.
And whenever I see Kenny talk, and whenever I engage with Kenny, what I love about him is that he represents my inner brain. Like, I'm as conflicted and as turmoil as he is, but I do a better job of keeping it inside. He just lets it out.
Well, I think that he doesn't let it out enough, so he takes this opportunity to kind of vent. I think is more what that was,
His honesty with himself is refreshing.
He just calls himself a perma bear. Just every day. I'm just such a perma bear, buying stocks, perma bear, Buying stocks.
Hey,
So good.
And your other guest before, Tony Dwyer, dude.
So good, man.
I mean, I've known this and I've railed on this for years about I don't understand why traders have to trade these numbers, these government numbers that come out. And we've talked about this before. We've all agreed that the data that we're trading on is garbage. But man, what he said about how that data is collected, I mean, I didn't even know it was that bad. And I've been bearish on this data for years. I can't believe that people and algorithms trade these numbers as gospel and like hang on every data point. Like it's such garbage.
This is a government numbers guy. I would assume, I mean, only Tony can tell you for sure, he's spending a good amount of his time every day looking through these economic data reports. So
and saying to himself, what the fuck?
Yeah, but he's more incentivized than anybody to be like, yeah, they're good numbers, because you don't want to think that like your starting point in the data that you're using to do your work sucks. He's just coming right out and telling you, as a guy who uses them, they're terrible. So that was great to hear.
When he was saying that, it actually was making me mad. I'm just like, it's so ridiculous that people care about these numbers. Anyway, moving on.
Anyway, Sean.
Rob Hood says that we need to play Sandman when Sean comes in. Honestly, enter Sandman like a Mariano Rivera bringing in Sean. I kind of like that, you know?
Sean needs some good music. We have been doing the Flow Show for a while now, but there's like been some cool rock intros, and it changes Sean's energy. It's like just what he needs to hear before the red light goes on.
I kind of like the down and down, 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 down. All right, so Sean, ready? How do you? I know Strazza loves this. This is a very Strazza's dad type situation that Strazza has inherited. Is the old Eddie Elfenbein like Midwest mid caps? God, I love these things, you know. I didn't always love them. For the record, I didn't always love them, but I feel like Strazza's love for them and Strazza's father's love for them. You know, I've kind of embraced the Midwest mid caps very much. And then one more thing I want to say, when you talk to a lot of old timers, very experienced market participants, 30, 40, 50 years in the business, and I talk to a lot of these guys for many years, one thing a lot of them say is that their biggest winners of their careers came from the mid caps, or at least when they bought them originally started out as mid caps, right? So there's a lot there.
Or what you see a lot is somebody who's been investing for the long term for, like you said, 30, 40 years. And we see this doing the tax prep. I used to work with my dad. So you're going through everybody's brokerage statements. And one thing that happens a lot is they'll show you, oh, this is my biggest winner, my best stock that I've had. I've had it for 30 years. And you've never fucking heard of it. You've never heard of it.
That's right.
And I'll tell you guys, if I died and came back to this world, I want to come back as an Eddie Elfenbein. That guy, man, if 20-year-old Sean who just started making money, if I started investing every dollar I had the way Eddie Elfenbein invests, I'd be doing real well.
We can make an Elfenbein-inspired scan. We'll figure something out for this universe.
But they don't have to be in the Midwest, or do they have to be in the Midwest?
No, you open it up. You open it up. That's cool marketing. Yeah. But they're everywhere.
It's cute that there's some great companies in the Midwest.
You know, I'd love to get the scan across the country, right? We'll make it an American scan for right now. We can open up internationally if we want. We'll make it an American scan and then do how many of those are the central time zone, right?
How about a state heat map?
No, not state heat map. Time zone heat map.
Okay, fine.
Yeah, time zone heat map. So north of the Mason-Dixon line, Central Time.
They have some cool platforms.
Is that right?
You could do that kind of stuff on. You've seen them. We've done
north of Mason-Dixon, Central Time.
I don't know what the Mason-Dixon line. I'm not a map guy. I'm not a history guy. I don't know what
Tennessee, Kentucky,
Mason-Dixon
right?
line, bro.
I've heard of it. Yeah, heard of it.
It's in Maryland. It's the line that separated the Confederacy and the Union.
For the record, it's in a lot of states.
I don't know anything about it.
All right, whatever.
This is part of the 84-year war cycle.
You woke up the Maryland guy. Anytime I could brag about Maryland, Spencer gets in.
All right, there's 5 minutes to go. We're not going to talk about basketball at all today.
Hold on. Sean is in here. Sean, and then we'll get into your basketball. Sean, tell me why you love the Midwest mid-caps so much.
It's a particular Midwest mid cap that I like. This Smith AO, this stock I'd never heard of until it popped up on one of our scans this week. I looked into it. I loved the chart. I mean, look at that base, right? That's like a classic base that we like to buy, a stock making new all-time highs. And then the fact that I'd never heard of the company, never seen that ticker. And then you told me it was based out of Madison, Wisconsin. Is that correct? Or was it Milwaukee?
I believe it's Milwaukee. I believe it's Milwaukee.
Fine. I love anything from Wisconsin. I lived in Chicago for 10 years, and going to Wisconsin in the summertime and in the fall during football season was some of my favorite stuff to do. So I just more to the point is when you see a stock like this, a stock that you'd never heard of, that's never on a radar, that nobody's talking about. You mentioned in our analyst call yesterday that this stock does not work with Wall Street, right? There's no analyst covering it because they don't need the money, right?
Nope.
That should be a big green flag right there. A company that doesn't need Wall Street to do what it does, yet it's publicly traded. That means that's a company name. What's that?
Is this a fade the street name, Strazza?
They got like 12 analysts covering them.
Oh, really?
So which is small compared to most publicly traded companies, right? So when you
for this size,
12 is not nothing.
12 is not nothing for a company that's only 12 billion in market cap.
12.
That makes water heaters or whatever the hell they make.
Dude, water heaters are important. They're in every house.
I'm sure they are. I don't know the first.
Right.
All I know is that my water heater keeps making freaking noises and the guy doesn't come. So that's all I know.
I know that they make them a lot smaller now.
So when you see a company like this, right, that like you never heard of it, but all of a sudden when you look into it, you're like, oh, wow, they make products that everybody uses, like every house in America. I'm exaggerating, of course. I'm sure not every house in America, but many houses, certainly in the Midwest, use this product. It's like, wow, where's this been all my life? I love stocks like this because when a stock like this is making all-time highs, and it hasn't done it in at least 2 years now, 3 years, all of a sudden it starts popping up on radars. People have never heard of this before, people like me, and they're like, oh, look at this stock. And they start looking into it. They look at the numbers, and we're not fundamental people, but it's like, oh, wow, there's a good business here. And that story just kind of builds and it builds. And hey, that could be the driver that takes this thing north of 112, which is what we're hoping for.
No doubt.
Yeah. So I'm excited about this one. Does that mean it's going to work? Of course not. It might not work. In fact, there's a good chance it won't work. But if it does work, we're going to get paid very well. And those are the types of trades we like to put on.
Do you still have, are you still long Maricols?
Nope. Snake bitten in that one, baby. Snake bitten. I think the last 3 times I've put a trade on in Mara, I've gotten stopped out.
Really?
Yeah.
Going back to the well too many times. It worked so well. This is not last year, guys. It's not last year.
It's funny to hear JC say that because oftentimes when I say I don't want to go back to the well, JC's like, "Don't be such a piker. Go back to the well." But now that
I don't use that. I don't use that word as nowhere near as much as you use that word. Jesus.
I was talking about the Maricols yesterday. You didn't like them.
Who, me?
Yeah.
There's just easier trades out there, bro. Mara was the trades for Mara last year were so clean. We did so well. Okay. This ain't that. This ain't that.
Put it on yesterday. We already got a free ride. So
great.
Okay.
It doesn't mean that it was an easy trade. You made money. Great. I'm not rooting against you. It was just it's just a harder trade than the ones we had last year. That's it. There are easy trades. I don't want to say easy. There are easier trades today that are similar to what Mara gave us last year.
Okay.
And I would rather be in than getting cute in this mess.
Why is Pinduoduo fraud, Spencer? Why don't you say these
Chinese?
Things? Why don't you say
Don't
these
even
things
get me
on the
started.
show?
Don't even get me started.
What's the?
Don't even get me
I
started.
would love to know.
Well, why is it a fraud? I slacked you the article. Did you read the article I slacked you? This is 3 weeks ago.
No.
Okay. Well,
Sean's getting hit by Tifu salesman. What's going on here?
Yeah, this company's the total scam. All right, I'm doing recess and then the top out of here.
You can't say that and say nothing.
All right, basketball. First game, I think, is what, 12:15 Eastern time? I think. Yeah. I'm hyped for the BYU Duquesne game, which is at 12:40. BYU makes the second most threes per game in the country, but I've got Duquesne, the 11 seed, at the upset. First paid in 47 years. Excited for it.
Wow, and you got Drake on upset alert today too.
Yeah, Drake and Duquesne. Those are my ups. I've got more, but those are the big ones I'm watching today. Big day.
Let me throw you two. I like those. I like that. NC State. These guys are scrappy, man. This team is fun to watch. You see their center; he's freaking huge.
I watched the ACC final game, and they got a guy you really don't see Division I power conference basketball players that are wide. Dude, this guy is a big guy, man. Let me tell you.
Do you remember DeJuan Blair?
Of course, he had no ACLs.
Big boy. Yeah. So NC State, kudos to them. I think they became the second team ever to win 5 games in 5 days, and just completely, just as they route their conference tournament. UConn did it, I think, in 2011, the Kemba year. So NC State, 5 straight. They got the momentum. They're playing Texas Tech. Wouldn't be surprised. I think they're getting a couple points for them to pull it out. And Kansas is just, I don't know, man. I don't even know if they want to be in the tournament. They've had such a, rough couple of weeks here. Upset alert with Stanford.
I hear that. I just dropped. For those of you asking about the article about Pindauda or PDD, I just dropped it in the chat right there from the FT a few weeks ago. Just read it. Just read that, and then you'll know what I know.
I'm spreading misinformation.
So I'm conflicted on the tournament right now, first week, because as many of you know, I live near Boulder, Colorado, and the CU Buffs won last night, the play-in game.
Yeah.
So Colorado is going to be in, but their first game is against my other team, the Florida Gators. So I'm a little conflicted for tomorrow.
How many teams do you have, man?
You root Gators. Sean roots Gators.
I root for teams in places that I've lived. I lived in Tampa. The Gators were the local team. Yep. Now I live in Boulder. CU's the local team.
All right.
But, I root for
You've lived a lot of
live.
places. Yeah.
I've moved around.
I root for Big East teams and Florida teams.
Right. Strazza's the same way. Strazza didn't grow up a Miami Hurricanes fan, but he moved to Florida, and now he likes the Hurricanes. I know how that works.
It's actually not.
Fair enough.
It's not entirely true. They were my football team as a kid because they were so good. They had those great teams when I was growing up. But yeah, I would still like them anyway.
Fair enough. All right, it's Thursday. We got the options jam session with Sean at noon. We, of course, have chart requests live at 1. That's right here on the channel. See you guys there. Thanks to our guests, Tony, Kenny, Sean. See you guys. Go make some money, all right?
Bye, everybody.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off.